Why the Canadian dollar moved up and down, a real 10-year story. Friends, in the previous video, we understood why currencies move in general. Today, let us apply that knowledge to a real country, our own Canada. Canada is a God-blessed nation, rich in resources, stable democracy, strong institutions, yet its currency also moves up and down. Let us understand why. Canada and its currency. The Canadian dollar is closely linked to natural resources, especially oil trade with the United States interest rates and global confidence. Canada is one of the world's major exporters of energy and commodities. This makes our currency very sensitive to global markets. Oil prices and the Canadian dollar oil is extremely important for Canada. When oil prices rise, Canada earns more from exports. Foreign buyers need Canadian dollars to pay. Demand increases and the dollar strengthens. When oil prices fall, export income reduces. Confidence weakens and the dollar falls. This is why the Canadian dollar is often called a commodity currency. 2015 to 2016. What happened around this period? Global oil prices collapsed. Canada's energy sector suffered. Export earnings dropped. Investors became cautious. As a result, the Canadian dollar weakened noticeably. This was not because Canada became a bad country. It was because one major pillar of our economy was under pressure: interest rates and Canada. Another powerful factor is interest rates. When interest rates in Canada are higher relative to the United States, global investors find Canadian assets attractive. Money flows in and the dollar strengthens. When US interest rates are higher, investors prefer US assets. Money flows out and the Canadian dollar weakens. Over the last decade, rate differences between the two countries played a major role in currency movements. Trade balance and growth. Canada trades heavily with the United States. When exports are strong and imports are controlled, the currency is supported. When imports rise faster than exports, trade deficit increases. This puts pressure on the Canadian dollar. Economic growth also matters. Strong employment and productivity support the currency. Slow growth weakens confidence. Pandemic and recovery phase. During the pandemic, global fear increased. Money moved to safe currencies. The Canadian dollar weakened temporarily. Later, when energy prices recovered and economies reopened, Canada benefited from rising commodity prices. The dollar strengthened again. This shows how global events influence currency, even if domestic fundamentals are sound. Recent years, 2024 and 2025. In recent years, moderate growth rate differences with the US trade pressures and global uncertainty kept the Canadian dollar on the weaker side. This does not mean Canada is weak. It means global forces and relative comparisons matter. Currencies are always relative. Strong compared to whom and weak compared to whom. What this means for ordinary people. When the Canadian dollar is weaker, imports become expensive, foreign travel costs more, prices of many goods rise. When the dollar is stronger, imports become cheaper, inflation pressure reduces purchasing power, improves. There is always a balance. Friends, the Canadian dollar's journey over the last 10 years teaches us one thing clearly. Currencies do not move randomly. They move based on real economic forces. Canada remains one of the most stable, resource-rich, and blessed nations on earth. Short-term currency movements do not change that reality. Understanding these movements makes us informed citizens, confident investors, and wiser decision makers. In the coming videos, we will go deeper into inflation, interest rates, banking systems, and how all these connect with our daily lives. Stay connected. Knowledge is true.